Taxation in the telecommunications industry is a complicated topic. A common misconception with taxation is that no taxes are due because no physical goods are being delivered. Unfortunately, this is not the case, and the requirements for taxation on telecommunication services are both varied and complex. This is largely due to distinct differences in rule sets between federal, state, and municipal taxation requirements. In this video, we hope to provide you with some information that will clarify the taxation requirements and help your business reach a position of success. As users and systems shift away from traditional communication methods, changing standards have resulted in changing expectations for regulatory commissions to tax services. While the communications tax used to be applied uniquely to landline services, usage in that sector continues to wane. To that end, it's important to understand which services have a communications tax applied to them and to determine if the services you offer fall under those categories to maintain compliance. In most cases, communication taxes will apply to these following telecom services. First are voice services. This branch of service includes what is considered communication services, whether they're delivered wirelessly, through wireline, or with voice over IP. The next service communication taxes would apply to are video services. This branch of service reaches wider than you may expect. As users continue to migrate away from traditional pay TV services, over-the-top service providers need to be aware that the streaming, live, or on-demand content they provide is likely taxed. Finally, we have tech services. Some tech services offered as part of software bundles or software as a service solutions also fall under the umbrella of communication taxes. While this is an ever-evolving section of the industry, Internet of Things devices are commonly affected by communication taxes due to their frequent use of wireless networks by means of 3G, 4G, or 5G connectivity. In most cases, it's worthwhile to conduct additional investigation into specific tax burdens anytime the service is being offered, especially when the service connects to the internet or has to do with telecommunication services. Once you've determined whether your business needs to account for communication taxes and which of your services these taxes would apply to, you'll need to prepare for the remaining taxes charged by the various levels of government and determine the exemption amounts where applicable. The leading tax service consultants at Tax Connects highlight 10 tips for businesses in the telecom or VoIP industry. Identify any regulatory requirements imposed at the federal level. Identify any regulatory requirements imposed at the state or local level. Identify the applicability of any transactional taxes at the state or local level. Determine how you'll invoice your customers. Apply for any required or applicable federal licenses. Apply for any required or applicable state or local licenses. Register with the applicable state and local authorities. Implement a compliance reporting program. Submit any appropriate exemption documents to your upstream carriers. Calculate, bill, collect, and remit your taxes and fees. Following these steps will place you in the best position to ensure you're meeting all taxation requirements. Having the right tools for the job makes calculating your tax burden easier, and Sonar is positioned to provide you with these tools. With the built-in tax tools allowing you to define multiple levels of global or geographical taxes to specific services in your instance, you'll be able to quickly manage every aspect of your tax obligations, including communications tax, at the federal, state, and local levels. Each tax can be applied to individual services, and when these services are applied to an account, they can be individually exempted. Furthermore, the built-in business intelligence reporting available to you from your Sonar dashboard includes a detailed taxes report providing you with the information on all taxed and tax-exempt transactions that occurred in your instance. This means you'll be able to quickly find the information you need to determine taxable invoice revenue, taxable discounts and credits, and overall taxation amounts for your business, as long as the transactions are recorded within Sonar. Managing taxes for an organization can be challenging, even with the assistance of recorded transactions and software calculations. We understand that everyone has their preference as well, and some businesses would rather offload the handling of their taxes to a professional team, either for complexity reasons or due to personal preferences. For this reason, Sonar natively supports integration with Avalara, allowing you to provide them with your transaction data automatically and let Avalara calculate your tax obligations. Offloading the process of calculating taxes means removing the pressure of navigating complex tax jurisdictions and obligations, while simultaneously being sure that you're correctly reporting all taxes, including mandatory communications tax. Whether you opt to calculate taxes manually with accounting software, with the assistance of Sonar, or through the integration with Avalara, taxes can still be complicated. Consulting experts is always an option, like the telecommunications specialists at Moss Adams. Making sure you're meeting your tax obligations isn't just a good idea, it's mandatory to continue operating in the industry and succeeding as a company. Having the tools available to your organization means you can stay a step ahead of your competition, swiftly proceeding through tax season while they struggle. If you'd like more information on how Sonar can help you monitor your transactions, calculate your taxes, and provide you with a detailed breakdown, schedule a demo today.